Hello, everyone, and thank you for joining. My name is Dylan Graff. I do investor relations here at MarketX Ventures, and it's my pleasure to open up our first session at the future of e-commerce. So to give a little bit of industry background, the e-commerce technology market is poised to grow by about $5 billion through 2024, progressing at a forecasted CAGR of about 12%. The market is driven by the increasing e-commerce sales and the growing need to streamline business processes. In addition, increasing e-commerce sales is anticipated to boost the growth of the overall market as well. COVID-19 has been a primary factor as an accelerant in the e-commerce technology space, and its rapid growth over the last year has allowed the industry to progress as a whole. As consumers are forced to stay home and shop online, the seamlessness and ease of services such as Amazon and Shopify quickly allowed consumers to transition into the digital marketplace without much of a hassle. E-commerce really isn't just limited to the selling and buying of goods online. An increasingly important trend is the integration of content creation, such as live streaming, with leading streamers on YouTube, for example, will regularly partner with sponsors to test out products or food while live, while millions of users will tune in and watch. This demonstrates that e-commerce is constantly evolving and is a highly adaptive vertical that's uniquely capable of capitalizing off tech trends in other verticals. It's my pleasure to introduce our keynote speaker, Carlos Cashman. Carlos has worked with numerous successful startups as an executive, founder, investor, and advisor in the US and abroad for the past 16 years. Carlos is the co-founder of Thrasio, which is the largest global acquirer of Amazon FBA brands. By acquiring over 100 top-rated brands and managing the scale of more than 22,000 products, Thrasio's brands are more profitable, grow faster, and outperform almost every other seller on Amazon. Carlos is an experienced entrepreneur, investor, and manager, specifically within the advertising, marketing, software, and hardware spaces. He has started 15 companies and has been part of several venture-backed and non-venture-backed companies. Thank you very much.
Well, thank you so much for joining us today. As everyone knows, Thrasio is a very exciting business, and we're very honored to have Carlos serve as our keynote speaker today. So to get started, Carlos, would you like to tell our audience a little bit about, Thrasio, how you guys got started? Really love to hear the, journey from the start.
I'll try to abbreviate it so it doesn't bore everybody too much. But yeah, I mean, look, we acquire Amazon third-party sellers. I think everyone here is probably familiar with this as an industry now. It's kind of become, but look, it's amazing that when you look at what marketplaces around the world have done, and let's take Amazon as the example, but many others have followed in their footsteps. They've created a place where individual solopreneurs can create a business almost overnight, and create a brand, get products sourced from anywhere in the world and sell them. And so it's created a huge community of people who have also leveraged the massive sourcing and delivery and infrastructure and shipping infrastructure all over the world, the production infrastructure in China in particular, the manufacturing. So people can come up with brands and create products and then sell them on these marketplaces. And whether it's Amazon or Mercado Libre or Flipkart or whatever, it's growing like crazy. And it's a wonderful entrepreneurship creation machine, I find, right? So there are, last estimates from Amazon were, I think, 500,000 businesses, brands, which are generally solopreneurs, that are doing over $50,000 a year, right? And it was like 200 some thousand over 100,000. That's real money for a lot of people all over the world. And best estimates are there's probably 40,000 plus doing over $1 million a year. So, one thing, well, we got into this because I had a Facebook advertising agency that was doing a lot of e-commerce work. And I was seeing all the D2C explosion in 2013, 14, 15, that time period, right? And we were getting a lot of leads from small D2C companies, Shopify sites, whatever, doing a couple $1 million a year who wanted to advertise on Facebook. And, they didn't have the capital to do it. They wanted to test with 10 grand or something. And most of you guys, if you do performance marketing, would understand, you just can't do that. You got to spend, 30 grand a month for a few months to start to really figure out if it's working and dial it in. So, but we started to look at that and said, well, maybe we could put these, companies together. We could raise some money and buy those, and we could do the marketing. I had the people at the agency and my partner, Josh, we were looking for a business to do together. So we started thinking about that actually first. And then we got introduced to Casey Gauss at Viral Launch and learned about Amazon. And the rest, as they say, is history. We decided to try it on Amazon instead. And honestly, this wasn't this huge forethought, oh my God, this is going to be a huge thing. I mean, I thought this could be big. I looked at it and said, wow, we might be able to build $100 million, $150 million business in a few years, is what I thought. if it went really well. I thought, if it doesn't, we put together a few of these and we'll be a $30 or $40 million Amazon seller. Hell of a lifestyle business. And I can use that to find the next thing I want to do or just invest. I mean, it's kind of funny, but the white beard is from the years here. I was a little older. I've been an entrepreneur my whole career, a long time. And I was actually kind of ready to take a step back and think about just investing and doing the next thing. And then you walk into something like Thrasio, and it's just gone unbelievably fast, faster than we could have thought. And we've had an amazing team that has been able to keep up with this. That's what's made this whole thing work. So look, fast forward 2.5 years, in early 2019, we were about 16 people, and we were having our holiday party in New York, I remember. And, here we are nowadays. We're hiring about 150 people a month. We're probably 1,600 people all over the world. We're closing in on $1 billion in revenue. And, it's 2.5 years later. It's been pretty crazy and pretty amazing. So that's kind of the story in a nutshell. How's that?
Great. Thank you so much for sharing. So maybe, for a lot of people here who may or may not have understood the e-commerce business too well, during COVID, obviously, it has really tremendously changed the landscape. What do you think is the impact of COVID on your business?
Well, I mean, it doubled the business. I mean, it's absolutely incredible. Now, look, not every category blew it out, right?
Exactly.
But a lot did. And so it literally doubled the business. I mean, for us, but it also just, it pulled forward a lot of, the transition that was already happening to e-commerce, and just sped it up. And, I think we're slower in the US than it has been in China, for instance, but it's picking up a lot of speed, right? So it was pretty incredible to see. I mean, it was also a huge challenge, right? Because we were already growing at a fast pace, and to suddenly be handed that and have to keep up. I got to say, our supply chain team is second to none. Absolutely unbelievable how they were managed to stay on top of that and stay ahead of it. They were always 1 or 2 steps ahead. And Amazon, they get a lot of crap, but they pulled an amazing feat, last year, being able to take this massive increase and make it work and deliver product to people. I got a buddy who always asks, who was more necessary to the happiness and well-being of American citizens last year, Amazon or the federal government? And it was probably Amazon. If we couldn't have had packages coming and stuff delivered through lockdown and stuff, who knows what would have been happening. So it was pretty amazing, right? And look, it's not just Amazon, it's all sorts of D2C sites and all the other delivery infrastructure and those things. But it was pretty amazing to see. So both they opened another 33 distribution centers, I think, in the last year, got them up and running in the midst of all of this,
Wow.
pandemic. It was pretty crazy. So it was a big deal for us and for all the businesses we look at, right? So they all got a big jump. Now it's challenging comping against that this year to last year, because there was a huge jump last year, and some of it stayed. I mean, in general, the levels have stayed where they were, but they're not getting that huge jump again, right? So it's been interesting to see, but now it's going to be on a more just, traditional growth trajectory that it was before, having jumped forward from, let's say, 16% of, US retail to 23% or something. Now it went to e-commerce way faster than we expected, right? Or 25, I don't know. Now it's going to be back to maybe the regular growth rate here.
I see. So when it comes to the formula that contributed to this huge success, for a lot of us here who are fellow entrepreneurs, so love to learn about, when you got started, what do you think are some of the key success factors that made Thrasio, unique and also differentiated from, some other copycats, maybe also on Amazon?
Well, there are lots of copycats out there, and I can't honestly say that we are differentiated particularly. I mean, I'm sure we are. But look, the idea is fairly simple, but the distance between an idea and an execution is miles and miles. If you're entrepreneurs, you know this, right? So when entrepreneurs I see a lot of business plans. I love to do it, look at them. We'll be sharing more, I'm sure, Catherine, in the coming years here, looking at more businesses. Sometimes you find younger entrepreneurs or early ones who want you to sign an NDA, or they're all secret about their idea. Right. And the first thing I do with that is say, look, we're going to make 500 copies of your deck, and we're going to put it in every Starbucks in Boston. And you're going to walk around for a month and give speeches about your business, because no one gives a shit, frankly. Right. You may think everyone does, and the idea is 1%. The execution is 100%. And this idea is pretty simple. And we weren't even the first to come up with it, right? One-on-one commerce. We thought we were doing something unique and came up with this. One-on-one commerce was out there before us. But in just a very clear example of how idea and execution differ, they folded. right? Tried to sell their businesses to us, ended up selling them to someone else. It's just not so easy to make this stuff happen. So what made us successful is it's what makes any company successful. And I've started companies in all sorts of industries, from enterprise software to SaaS to agencies, advertising, Facebook, all this stuff, and now this in e-commerce. And I've invested in many more. It's just people. You get a bunch of people to agree to go after something together, and that's hard to do. It's really hard. And you can do it with 10 people. Maybe you can do it with 20. Try to get 50. Try to get 150. And try to get a system that can take that many people in on a regular basis to manage growth, and do it with a cohesive, unified goal in mind, and make everyone feel like they're really part of something. That's just really hard to do. And I think a lot of people just overlook that, right? And certainly a lot of the financial types are like, they look at our market and go, oh, it's easy. It's an arbitrage play. We buy it 2 to 3x or 4x and put them together. We sell it for 12. Yeah, good luck, right? I mean, it's people think it's like buying an asset like Bitcoin or something like that. But I'm fond of telling people, like, with us, like, if you buy a yoga ball business, tomorrow you're in the yoga ball business, and that person who built it loves yoga balls, and they're all about innovating in yoga balls and creating new ones and different colors and seeing how they sell vis-a-vis competition. And all this. You have to get into that, and you got to get into the weeds, and you got to operate. And it is very challenging and complicated to operate at a high level on Amazon. And it gets harder people have heard us talk about our conveyor belt with 503 steps. It's actually probably like 800 different steps if you break it down to the sub steps and all this junk. But we have this process, and that's just to standardize a product, get it onto our platform. So then our team operates from there. But like, every product goes through this process that standardizes it. And it's so much things, to everything from how the creative is done to, a checkbox 5 pages into Seller Central, that you may forget to check as an individual seller. But if you do, that may, cost a 5% hit to revenue because it's B2B selling, or it's, maybe bundled together, things like that. So there's just an awful lot to do. So look, what's worked for us is, we're experienced, we're older entrepreneurs, have done this a bunch of times. Our initial team, the first 10 people, 7 or 8 of them are senior managers. And they were able to do the work, but they are still in the same role today. And I've never actually heard of a company that has done that. Like, usually you get to 50 people or something, there's a breaking point. The people don't scale, right? But we've been able to do, we've helped each other. I've focused a lot on this. This is all I spend my time on, is how we communicate as a team, how we work as a team, and helping coach people to get better. And then my partner, Josh, is a savant when it comes to finance, capital structure, and operations. I mean, he's unbelievable. So he likes to drill down to the minutia level, and then also do the capital raising at an incredibly strategic level. It was just a fortuitous and terrific partnership. And, that came together at that time with our early team, right? I mean, John, Stephanie, Brandon, Ken, Joe, Munir, all these guys who joined us really early just made a humongous difference on this company.
Yeah, that sounds like a really amazing team and journey. I know that many of us have gone through, looking at e-commerce as a big area of innovation. Obviously, in the last few years, a lot of technical innovation has happened in the space. Can you just walk us through some of the technical innovation besides business model? Obviously, this is a huge, advantage for Thrasio. What are some of the more technical changes that has happened, which really, boosted all these businesses?
Well, so I don't know about boosting those businesses. The way I look at technology is a tool, right? It's all it is. You've got tools in your tool basket, and it is a tool, and it must be used properly.
Sure.
What is most amazing to me is just the insane amount of tools available off the shelf out there that I can use and plug in and put together to make things work. That even 5 years ago, 10 years ago, I would have had to write all this stuff. Slack didn't exist. I mean, Slack is the backbone of the company. It's the water cooler, especially in the distributed work environment age. But I mean, email, Slack, Zoom, all these things and how you use them are amazing. So we have 175 to 200 SaaS subscriptions in the company. It's absolutely incredible. And some of these are very advanced, AI kind of stuff that is doing, time series modeling. And some are things like Slack or Asana or whatever, right? But, I always talk, being able to have that stuff. I remember, starting the company I took public in 2000, the first .com boom. We had to build all sorts of, none of this stuff existed. I mean, I had to pay $1 million a year for the license to a web server, right? IIS, a content server, a database, just to pay for that stuff. We had to pay for all that shit that's free today.
Wow.
It's absolutely incredible, right?
What a
So like,
transformation.
yeah, I mean, it's been amazing. So for us, like we came at this, used all this stuff, used these different tools, and people say, well, that's just what advantage is that? Well, look, Salesforce has 2 million client customers or whatever. Let's take 2 of them in the exact same industry, 10 of them, and they're doing the same thing. Are they all equivalent companies because they have Salesforce? Hell no, because some of them know how to use it and integrate into their process and into their company and into what they do better than the other ones, right? And they integrate that with other stuff, with other tools and whatever. So technology as a tool, how you use it is what makes you successful, right? So, I mean, everyone loves to make up this, oh, we've got this unique this or that, or look, everyone's got machine learning today. If you're not doing that, you're nuts, right? And that's AI essentially, right? And doing big data analysis. I mean, the heart of everything we do is data. It's all about data, right? And everyone says, well, you work in Amazon, you don't get the customer data. You get an enormous amount of data. We know what we're selling, when, how much, prices, and we connect to 40 different external data sources that we pull in that we can, for everything from pricing up to histories and to, estimates of volumes of competitors, things like that, all this stuff. So when you do all that's where you start to build proprietary advantage, right? And and that just comes with time. All these things get built into a company over time, right? And now we're selling on multiple channels, right? So we've got D2C, we've got other marketplaces spinning up, and there's interactions between all these things. But you can't learn that, without having data availability and without being able to get out there and do this stuff. And I hate to tell people who want to assume this is some play where you can have a computer just optimize everything and do it. It's not the case. Go sell a product on Amazon for a few weeks and tell me you could. I don't care what AI or what team you've got, DeepMind, whatever. It's just not possible, right? You don't have the data to train a system on all the different things it takes to run a brand on Amazon. I'm not saying it'll never happen, but I mean, again, we all know it takes 3 million pictures of cats to teach a freaking computer to know what a cat is in a picture, right? Like.
Right.
You don't have anywhere near that amount of data to understand the yoga ball space on Amazon vis-a-vis all the competitors and all the different things you can do to sell yoga balls, from pricing and deals and bundles and lightning deals and Facebook advertising, Google advertising, and changing the color, changing the headline, doing the SEO. I mean, there are a bazillion things that people need to get in. And we have our goal is to use tech as a tool to make it available to our people to be better at what they do and do it faster, more efficiently. And that's what we do. And so look, all that stuff, that being said, I think every e-commerce company in the world now has access to these kind of things and more of this, but it's how they use it, right? That's what it comes down to.
Definitely. Thanks, Carlos. And earlier this year, we saw that you guys raised 500 million, and now, over a billion mark, with everything growing in India, with China. Can you just tell us, like, what's your strategy now? Thinking about the global competition, what has changed since beginning of this year? Now we're, kind of mid 2021. Where do you see this going into 2022?
Well, so it's been interesting to see how quickly the copycats have spun up all over the place. That was a little surprising to me. not totally surprising, but there's that many, and that many people throwing dumb money at this, frankly, which is surprising to me. But I guess I shouldn't be surprised by that either. I've seen this kind of stuff before. And look, this is a huge market. I'm a positive sum guy, right? There's not, just because Nike exists doesn't mean Adidas can't exist and Under Armour can't exist, or Lululemon or whatever, right? We're talking about the biggest market, on the planet, consumer retail stuff, right? It's trillions and trillions of dollars. Like, 15 trillion, something like that people talk about, right? I mean, depending on whether you include cars and other stuff or not, but, these are humongous markets. And there's no, now that we've introduced all these new channels online and marketplaces, around the world, plus the ability to sell direct, plus, I mean, God knows what Facebook and Instagram are going to do with direct selling. That could be humongous. We got TikTok moving into it, right? And you watch what those guys do, and then watching China and what goes on there with e-commerce is just mind-boggling. And it's years ahead of the West, right? So, and the volumes are just enormous. So, our strategy, look, part of strategy, have you ever heard the phrase strategy is saying no? Any good consultant will probably hear that. And certainly for startups and for anyone getting into stuff, strategy is really about saying no in a lot of ways. It's about, what that means is knowing your wheelhouse and staying at it. And frankly, like, you talk to investors and and analysts and all stuff are like, well, aren't you worried about channel risk? It's just Amazon. I mean, that's just silly. That's crazy. You don't know Amazon if you worry about that. But like, we have enough to do just going right down that fairway, doing more. Our pipeline now that there's all these people in the space has never been bigger because they contact every seller and those sellers turn around and contact us too, right? So it's wonderful. It's a huge space. Amazon and the other marketplaces in the world are creating thousands of million-dollar brands every year. At best estimate, at lowest estimate, I'd say it'd be 3,000 a year between Amazon and others, and that's no way it's happening. It's more likely 10,000 to 15,000 a year, in addition to the 30,000 that were there 2 years or 3 years ago. It's just growing. And we've acquired under a couple hundred brands to grow to where we are. There's a lot of room in this space for a lot of people. Not all brands are created equal. They're not all great, but there's a lot to do. And then now you've got the other marketplaces too, as I was saying. Flipkart is doing this, right? In Japan you've got Yahoo and Rakuten as well, right? In Europe you've got a whole smattering of other sites, right? And they're all growing. They're all building building customer base and getting product, right? And so there's more and more places to sell. And then how do the consumers shop and where are they buying, right? As we talked about with TikTok, and whether it's Wish or that or Instagram or something, those are proliferating as well. So look, for us, in a large part, it's keeping an eye on what we do really well. And the vast majority of what we spend our time on and thinking on, all these people we're bringing in, are to do that. And now Amazon, we've been international since day one. Like, all these companies said, we'll be Thrasio of Europe. And it was kind of like tapping them on the shoulder saying, hey, we're Thrasio of Europe. We've been here since the second and third deals we did, Right. So, and we have a larger European operation now. We just hired a terrific leader, Garrick Hess, former Amazon executive, wonderful guy. And we've got a great team over there. We've had them for a while, and it's going to keep growing. It's very important to us. And we're looking, you could imagine internationally, what we look at is other markets where Amazon is making a big push first. Because that's the expertise. So we're following Amazon a bit, and then we'll build expertise on other marketplaces and other channels over time, right? So I'm very interested in international. Again, we've had a large presence in Europe. We're looking to Asia right now. Every other day seems like there's another article in India about who's going to be the Thrasio of India. We'll be the Thrasio of India at some point. Right. It's just, gotta wait for the right point and do the right thing. So look, I've got my eye on that a lot, and we're doing a lot in those areas. And you will be hearing from us over the next, every 6 to 12 months, whatever, about what we're doing in different geographies. I'm excited about LATAM too. And Amazon is not big in LATAM yet, but LATAM's dynamics they're fascinating. You're talking about 650 million people, like 4% e-commerce penetration, average income of like $11,000 across the whole area. I mean, it is, and it's dominated by Brazil and Mexico to start with, but this is a humongous market, and Amazon is not one there, and may not, right? I mean, there may be a smattering of other players. So building that expertise and getting in there, and there's some great companies I've met. There's some terrific founders, great guys. I've talked to them, that are building Thrasio lookalikes down there too. So, we'll be looking at these different marketplaces too. And if I did know my strategy exactly, I wouldn't tell you right now. but maybe I don't, but we're formulating all that right now.
Well, when you have everybody trying to be the Thrasio of China, Thrasio of Japan, Thrasio of India, all over the place, there's something you're doing that's right. So
I hope so. Otherwise, I'm like a Pied Piper leading these people all the cliff.
Right. Well, so, on that topic, right, many of our investors are, also looking to learn from you, not only just as an operator, also as a, personal investor as well. So in terms of your own personal philosophy when it comes to investing in private markets, right? You talked about you see opportunities globally. How do you think about investing across for yourself, like in terms of diversification, in terms of looking for the, next gen technologies? What are some of your ideas that you'd like to share with our audience here?
Well, that's a huge question, right? and I see a ton of stuff. Generally, what I try to do is outsource the thinking to someone like you, Catherine. So I say, you go find some good stuff. Tell me, and just I'll put some money into your fund. I don't have time to do this, right, myself. So I have friends. I've got I'm setting up my own family office. I've got a terrific buddy who's been doing venture for years. He's going to run that aspect of it. So right now, I send stuff to a small team that say, no, not everything. I don't just send everything on. There's a initial smell test you can pass with something, right? And look, I am not one of these people, like, I think it's crazy when investors funds say we only do biotech, because we know, like, I'm like, okay. And then, Thrasio or Alibaba walks across their desk for an investment. They go, we don't do that. I invest in great businesses. I don't give a shit what industry they're in. I don't have to know the details of biotech. I can understand Moderna has a unique technology that can make, unique solutions to today's medical problems and, vaccines and stuff. That's a cool investment, right? And I can get the basics of it. I mean, how much do you really know about the stuff, even when you think you know an industry? So again, I'm more agnostic about the type of stuff. I do want to see, look, I'm invested in, I don't know, probably 20 different venture funds, right? As a limited partner. So
Right.
I send a lot of stuff through to them. If I think this is pretty cool, I'll just send it on to some different folks and let them figure out if it's great or not. And it distributes the risk. I've found doing it myself, it's a great way to lose a lot of money because I just love entrepreneurs. I love almost everyone I see and talk to, and I want to invest in everything. And I'm not great at narrowing that down because it's more about the process and the people for me. And I love that. But when you got to put on an investor hat, you got to be more disciplined, right? And again, for me, I don't think it makes sense to make that discipline so sector focused that you miss out on great businesses. You got to be able to think about great businesses, but you need a way to think about them and analyze them. And nowadays, I'm more excited to see later stage stuff. That's again why I like a lot of what you're doing, because it's, secondary rounds in successful businesses, right?
Thank you.
So, I'm partial to that, but I'm also partial to the big sky ideas and people want to make change. And so it's just, you have to allocate a certain amount, that's how everybody does this as an investor, but you could lose, right, all of this.
Right.
So the stuff that is really early stage out there, energy tech, food tech, like I'm really excited about that, but I don't expect to see great returns there. Whereas there's another portion of the portfolio. I mean, nowadays, you can get really good returns investing in C rounds of companies, right?
Yeah.
And beyond. So, I mean, fantastic. So, because they're taking the returns that used to come in the public markets, right? So I'm doing a bit of both. And I did, a decent bit of public investing too. I mean, there's still there always will be great investments in the public markets too.
Yeah, thanks for offering that. And definitely a barbell strategy sounds like a great idea. And always thank you for being such a proponent, entrepreneurs, and supporting MarketX. So now we have a couple questions from the audience. Esperantis, you mentioned that you have a question. Would you like to ask Carlos directly?
Sure. Thank you, Carlos. Hey, Carlos, I look at your business. Are you trying to do in the future outside the marketplace of Amazon? Will you try to buy direct D2C and eventually you may become a omni-channel, try to operate in a motor business? Yeah, just a sort of thought how your
business. So we already operate D2C sites right now, right? So it has impact with Amazon as well, but we want our customers to be able to buy our products wherever they want to buy them, right? And we know I came out of that space. I know that space. We know how to do it. We have not yet bought a business that is 100% D2C. We haven't done that yet. It's more difficult for a lot of reasons. Otherwise, you'd see a bunch of Thrasio lookalikes trying to do that, right? And that was our initial thesis, right? But we moved it to Amazon because there's just so much that is simplified from the diligence all the way through to the operation by being on that platform. But once we have the people and the capability, we can run more D2C stuff. We will be doing more of that. And other channels. I mean, Walmart, it's not huge, but it's growing. They're trying, and there are other marketplaces around the world, right? Like I've mentioned many of them, and I expect to see us selling on all of those places at some point, right? So.
Sure, thank you. Okay.
Thanks, Rentis. Great. Next, we have Jonathan. Jonathan, would you like to ask your question?
Yeah, can you hear me?
Yes.
Yep.
There you go.
Yeah, my question was just given that, the value, everything's going so well in this sort of space in the pandemic. Have the prices the prices that you've been having to pay to acquire businesses been pushed up, i.e. everybody expects much more money than they did previously?
Well, what's interesting? Yeah. So yes, the pandemic pushed prices up. Everyone generally asks me if the competition has pushed prices up. Last year, that wasn't the case. The pandemic did though. And it did to the extent that all these businesses wanted can you guys see me?
Yeah.
Okay,
yeah.
Like my camera just did something weird. All these businesses wanted credit for their for the COVID bump, and no one was sure whether we should give it or not. But yeah. Our multiple actually came down in the fourth quarter of last year. So
okay.
It's still very reasonable. Now we're seeing it pressed up, both because people have realized much of the COVID bump has stayed and that there is competition out there. I think that's a temporary. Again, I've talked about the number of businesses that are growing and starting to realize they can sell. I think there's way more supply than there is demand, even if you look at, at us and companies like us getting through being able to actually operate these things. So I don't expect to see an enormous amount of pressure there. I mean, there are just structural things. These businesses get to a size, they're very difficult to handle for the solopreneur, the team of 2 or 3, and they don't want to build it into a 10-person, 20-person company and take that chance and all the challenges that come with that. So that's always going to keep a kind of, I think it's going to keep something of a lid on prices.
Okay, that's great. Thank you.
Thank you very much. Thanks, Jonathan, for asking this question. We are now also open for other questions. I see a few of investors have joined us as well. So please feel free to put on your questions or raise your hand and I can move you to the panelists so you can ask the question on camera. Well, in the meantime, I think I see another one here. So when it comes to competition in developing markets versus Americas, what do you see as the biggest challenge when it comes to markets like China, India, compared to the United States?
Well, I mean, they operate fundamentally differently. I mean, whatever you think, I mean, there's a similarity at the top level that people buy things online, yes, but that's about where it ends, I think. I mean, in terms of like how you get into business actually and operate in those environments, in India in particular, like it is vastly different than here, right? I mean, and how the population is just getting acquainted with e-commerce, and the middle class in India and China in particular is growing and new. And, these are what's always been fascinating to me, and particularly you see this in China, I think we'll see it in India too. Their first interaction with the internet was through a mobile phone. That makes for a fundamentally different environment to operate in and opportunities for businesses than here, where we still have a lot of people using PC. I'm on my PC right now, right? And I have a web browser open on the computer. So, that's why we see, I think, these all-encompassing apps in China that have everything, from payment to ordering to reviews to, you can get a movie ticket, get a cab to the movie. And
investing in one, Meituan,
Meituan, yeah, I'm thinking about, I mean, they're all kind of doing that. It's fascinating to me. And when that doesn't play here, it's kind of a pain in the ass. We have 15 apps for all this stuff. But so, there are big differences, but there's also differences in just the business environment, the climate, how you incorporate, how you pay people, like, how you deliver product. I mean, in a country like India, it's very different. So I've been around the block enough times and done enough different things that I know what I don't know. And I just know there's a shit ton I don't know about these markets. And I need good people in those markets who grew up there and worked there and lived there to help us navigate those waters. So that's the way I look at those markets, any international market for me, even South America.
Definitely. Yeah. I mean, part of the beauty of doing international investing, we've looked at a lot of deals in US, China, Southeast Asia, especially, a lot of our investors here are actually based, everywhere. We have now investors from 30 different. What we do observe is definitely, deal making in certain parts of the world is very localized, just like how Robinhood tried to do China, Airbnb tried to do China, both didn't work out so well, right? I mean, granted,
tried it too.
Not trying to put anyone down, but you can't just change your logo to a different color and hope that you will run in a different country. But so from your experience so far, working with these countries and trying to really boost Thrasio in multiple different geographical regions, what do you see some as like challenges, maybe like regulatory or more in the world of like just working with governments? Do you see that as a challenge, perhaps, given the current geopolitical climate?
So I do. We're not like, it's not a problem or a challenge to me right now in what we're doing. Could it be in the future? Yes. But I also think people overplay this all the time. It's like all this talk I hear from people who should know better saying, you got to distribute your supply chain out of China. I'm like, do you have any freaking idea how every single thing we build and everything I'm looking at, my monitor, my camera, my computer, is built in China in a supply chain that is so deep you cannot move it easily, right? There's, you know how this is, but in areas there's, a square mile with 200 different manufacturers that make all the parts that need to go into my massage gun or something. Like, I can't just get that in Mexico tomorrow. Now, are other places in the world trying and coming up and doing that? Yes, but then even Vietnam, you see, is like terrific, low cost base, smart population. But I've driven all over that country and the highways there, and they're beautiful new highways with an average speed of 30 miles an hour. And there's burros on them half the time. And they have like 2 ports and like a couple flights a day, like all this infrastructure from power to roads to, ports to airports. And like, it takes all of that stuff to make this work. And so like, you have to be able to play there. So I think people overplay the problems. Look, I think the integration between China and the US and China and the rest of the world is way deeper than anyone wants to admit or talk about. So are certain things like, are we going to start manufacturing PPE here? And vaccines in America? Sure. There's things like that we shouldn't have let go probably in any way. And chips, Intel is finally reinvesting in the US, right? But it doesn't make sense for me to build, like I said, a massage gun or my Yeti microphone over here yet, right? So look, I think I see people making noise and making effort to do that. And some of that will be good, and we'll be doing that too. There's other countries to source from. Look, some things are just even more cost effective elsewhere. I can get textiles better out of Pakistan and India, higher quality, lower price. So we do that, right? But in those, again, in those environments, I do look at look, India, Modi has made, they've been making noises about that, and they're giving Amazon a lot of trouble about foreign owners of businesses there. They're very proprietary about the millions of mom and pop businesses in the country. So they want to be protective of those. So how do we interact? How do we enter that market without upsetting it, without, doing it in a way that is coherent with what their goals are as well? That's what all these things you got to think about, right? I mean, look, you can't predict a massive regulatory change that's going to change everything overnight. But I always believe people's incentives are most aligned through pocketbooks. And we all make and more and do better with this rising tide that has lifted all ships, right? With globalization, let's face it. And that may not be a popular thing to say in the States right now. And we'll be changing some of it, right? There's no question. Some things should be manufactured here and better. And they'll be moved around the world. But I mean, I don't foresee, I see these as blips on a graph that is continuing up and to the right, right?
Definitely. Yeah. Thank you for being a proponent of
I could be totally wrong.
Yeah. I mean, a couple of years ago, I remember talking to a hedge fund manager, he's like, this is going to be a black swan event. There's going to be anti-globalization sentiments, or governments are going to be, posed against each other, which, all happened, all true. But here we are trying to bridging global gaps and hopefully work as a team, everybody here together. And with the growth of Thrasio, obviously you guys are growing every continent, out there. So definitely, look forward to seeing all the success with your company. Again, thank you for participating in our panel. To really appreciate your, attendance and also your insights with the audience. Is there anything, you would like to mention as a last words to our audience when it comes to, growth in this market, and also what's your prediction in the future?
I'm not in the business of predicting the future because you can't be right. So that's only a losing proposition. No, the only thing I'd say is we need great people. We need awesome people all over the world. So if you or anyone wants to come join Thrasio, we've got a terrific place to work, great group of people. We want more great people to come in and join us and help, and send them our way.
Awesome. We will definitely, hopefully playing a part in helping Thrasio grow internationally. So thanks again, Carlos, for joining us today. Thank you so much for your time, and we look forward to, collaborating with you. Thank you so much.